Index funds are popular for consumers who wish to participate in the stock market without selecting individual stocks. Index funds have become popular in India due to their ease of use, minimal costs, and promise of consistent returns. These funds seek to mirror the performance of a specific index, such as the Nifty 50 or Sensex, by investing in the index's constituent equities. In this video, we'll look at some of India's largest index funds and discuss why they're worth considering for your portfolio. 1. HDFC Index Fund's Nifty 50 Plan. The HDFC Index Fund Nifty 50 Plan is one of India's major index funds. This fund tracks the Nifty 50, an index of the top 50 businesses listed on the National Stock Exchange, NSE. These companies represent diverse areas of the Indian economy, ranging from banking to technology, giving investors a wide view of the market. This fund's popularity stems mostly from its low expense ratio, which makes it an affordable opportunity to invest in India's major corporations. The fund's performance closely tracks that of the Nifty 50, making it an excellent choice for investors who wish to benefit from the Indian economy's growth without actively managing their assets. 2. SBI Nifty Index Fund. The SBI Nifty Index Fund is another major player in the Indian index fund sector. Like the HDFC fund, it tracks the Nifty 50 index, exposing investors to some of India's largest companies. This fund is noted for its stable performance and minimal costs, making it an excellent option for individuals seeking a hands-off investment. Investing in the SBI Nifty Index Fund means investing your money into well-established banking, information technology, and manufacturing corporations. It's an excellent method of diversifying your portfolio with a single investment, and because it follows the Nifty 50, it's less hazardous than buying individual stocks. 3. UTI Nifty Index Fund. The UTI Nifty Index Fund is another popular index fund in India that tracks the Nifty 50. UTI Asset Management manages it and provides low-cost exposure to the Indian equity market. One advantage of investing in this fund is its long track record of producing returns comparable to the Nifty 50's performance. Like the other Nifty 50 funds, the UTI Nifty Index Fund provides exposure to firms from various industries. It's an excellent choice for individuals who want to diversify their portfolio without spending much time monitoring the market. 4. ICICI Prudential Nifty Index Fund. The ICICI Prudential Nifty Index Fund is a high-performing index fund in India that tracks the Nifty 50 index, ICICI. Prudential Asset Management manages this fund, which is noted for its low expense ratio and consistent tracking of the Nifty 50's performance. Investing in this fund will expose you to India's blue-chip corporations, including Reliance Industries, HDFC Bank, and Infosys. The ICICI Prudential Nifty Index Fund is ideal for long-term investors seeking consistent growth with minimum management. 5. Nippon India Index Fund, Sensex Plan. The Nippon India Index Fund, Sensex Plan, is among the few index funds in India that track the BSE Sensex. The Sensex Index includes 30 of the largest and most financially sound companies listed on the Bombay Stock Exchange, BSE. This fund exposes investors to companies in various industries, including finance, IT, and energy. The fund has a low expense ratio and produces returns closely related to the Sensex's performance. For investors seeking a simple, long-term investment in Indian companies, the Nippon India Index Fund, Sensex Plan, is an excellent choice. 6. Aditya Birla Sun Life Nifty 50 Index Fund. The Aditya Birla Sun Life Nifty 50 Index Fund is another important player in India's index fund industry. It monitors the Nifty 50 index and exposes investors to various sectors, including banking, healthcare, and energy. The fund's low expense ratio and consistent returns make it an appealing choice for those seeking to invest in the Indian market without incurring exorbitant fees. This fund is intended for long-term investors seeking growth consistent with the overall performance of the Nifty 50. It's a fantastic choice for people looking to develop wealth with consistent market returns over time. 7. Tata Index Fund, Sensex Plan. The Tata Index Fund, Sensex Plan, is another index fund that follows the BSE Sensex. It invests in the 30 companies that comprise the Sensex, exposing investors to some of India's most well-known corporations. This fund is noted for its simplicity and minimal costs, making it a popular choice for passive investors. Investing in the Tata Index Fund exposes you to various industries, including IT, banking, and consumer products. The fund's low expense ratio and broad market exposure appeal to those seeking consistent returns without actively managing their investments. 8. Franklin India Index Funds. The Franklin India Index Fund mimics the Nifty 50 index and provides investors with a simple and affordable method of investing in India's major firms. Franklin Templeton manages this fund with a low expense ratio and returns closely related to the Nifty 50. This product is ideal for investors seeking exposure to blue-chip companies and long-term financial appreciation. Its cheap fees and passive management style make it an excellent choice for people looking to participate in the Indian stock market without being concerned about market volatility. 9. IDFC Nifty Funds. The IDFC Nifty Fund is another index fund that follows the Nifty 50. This fund is intended for individuals seeking a low-cost, passive investment alternative that offers broad exposure to the Indian stock market. The IDFC Nifty Fund is noted for its stable performance and minimal costs, making it an attractive option for investors looking to invest in India's major corporations. The IDFC Nifty Fund, with its simple investing approach and low expense ratio, is suitable for long-term investors looking to gain from India's overall economic growth. 10. Axis Nifty 100 Index Fund. Unlike most funds on this list, the Axis Nifty 100 Index Fund tracks the Nifty 100 Index, which contains the top 100 NSE-listed firms. This portfolio provides greater exposure to the Indian equity market by including large and mid-cap businesses. The Axis Nifty 100 Index Fund is an excellent choice for those seeking to diversify their portfolio and obtain exposure to a broader selection of firms. Its cheap fees and passive management technique make it appealing to long-term investors. To summarize, these are some of the largest index funds in India, providing various options for investors seeking broad market exposure at a cheap cost. Whether you wish to track the Nifty 50, Sensex, or Nifty 100, these funds offer a straightforward and efficient method to invest in the Indian stock market. If you enjoyed this video, please like it and subscribe to our channel.